Welcome to the Wheelbarrow Profits Podcast, where you get multifamily investing made real. Learn from top players in the real estate investment world as they share their secrets with you and discover proven strategies on apartment investing that actually work. To learn more about Wheelbarrow Profits, visit jakeandgino.com, your one-stop shop for everything multifamily. Now to your hosts, Jake and Gino.
Hello, everybody. This is Jake Stenziano, host of the Wheelbarrow Props Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the best-selling author, the G-Daddy, Gino Barbo. Gino, how's it going?
Mr. Stenziano, word of the day today, blue-collar work ethic. Why don't you tell everybody what happened this week? We had a very special week this week. What happened, bro? Yes, we did.
My wife had a baby. I didn't have a baby. So that is, I think you're teasing something. What you got? You
both had a baby. You had Mr. Stenziano number 2, huh? Really, really excited that he's adding to the fold. He's only got 4 more left, bro. You got 4 more to come. Come bring it, man. I want you to have multiple.
That's a big gap to close. I don't know about that.
Dude, make it happen. It's blue collar work ethic. Get it done, bro.
It's blue collar work ethic. So anyways, guys, this is where we normally plug something to pay the bills. Now for our listeners, we only showcase products and services that we approve are used in our own business. This time, we're going to tell you about something of ours, specifically our Wheelbarrow Profits community. G-Dad, father of 6, take it away.
Mr. Stenziano, you know we've been working hard at growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group. What we're looking for is those who want to follow a proven framework, that we've created: buy right, manage right, and finance right. We want to leverage our connections, our education, and mentorship as ways to take your business to the next level.
So guys, if you're interested about finding out more how you can become a part of our amazing community, apply to work with us at jakeandgino.com/apply. All right, enough of that. We got a very special guest today. Today's guest is Dave Zook. Dave is a successful business owner and experienced real estate investor, active in the multifamily space, self-storage, and resort community development. Dave's touching them all, man. A little baseball terminology right there. He and investors own well in excess of $150 million worth of real estate and has more than 3,000 units in the portfolio. We got him in Texas. We got him in Tennessee. So we got another Tennessee investor here, Gino. So without further ado, Dave, welcome to the show.
Jake and Gino, thanks for having me back on your show.
Man, thanks for coming back. Let's just, for the folks that didn't listen last time, give us a quick rundown of just all the businesses that you're in, because I know the last one, last time you were on, you talked about the ATM machines. So give us a quick rundown of the different businesses and how everything came together.
Yeah, so our family business is a modular building business here in Lancaster, Pennsylvania, and we ship buildings all over the country. We ship modular buildings all over the country, outbuildings, not so much on the residential side, but garages, horse barns, animal shelters. So that's what we do. That's the business I grew up in. And going forward, it's been multifamily. Been heavily involved in the multifamily space here in the last 7-8 years. I'm also heavily involved in the ATM space. We do a lot of ATMs. In fact, I'm in the middle. Well, actually not in the middle. I'm just wrapping up a portfolio that we took down here in the last month. We do some self-storage. I love self-storage. I love the team. I'm also involved in Belize. We're the lead investor in a resort called Mahogany Bay Village, and we just opened about a quarter ago, back in December 6th of last year, so a few months back, as a curio collection by Hilton. So that's been a lot of fun. So lots going on, plenty to keep me busy, but it's a lot of fun.
That's awesome. I mean, this is one of the reasons why Dave's going to be one of the speakers at our live event. He's going to be opening up the live event. He's going to be opening up and talking about the mindset of an investor. And you can tell why, because he's been doing this. He's got tons of assets. So guys, if you want to get tickets, they're online at our website. But what I want to ask Dave is, why did you transition out of the family business, it looks like, and into other assets?
Tax. I was getting taxed to death.
That's not what you make it to keep, right?
I was paying around $500,000 in tax a year.
Wow.
And I really grown up, I had made up my mind that I wasn't going to invest in real estate. I watched my dad park some money in real estate. He self-managed some of his single family homes. And I just said, you know what, there's got to be a better way to make money than that. It actually ended up working really well for him, but it just, I put my focus in business, and it got to the point where those businesses were doing really well. And I was just plowing ahead, full speed ahead. And I was always taught from the time I was little that you make a lot of money, you pay a lot of tax. And so I was, I didn't know there was another option, but when I started paying those kind of taxes, I started researching, and I did a deep dive and studying a lot of stuff, studied Rich Dad, Poor Dad, and just about everything else Robert Kiyosaki ever wrote. Got around some good folks and realized that real estate, multifamily specifically, if you use a little strategy, it can be a real tax shelter. So I got chased into the multifamily space, really.
I love you said that, because I was up in New York and I was visiting with a friend, and this shout out is to Ben. Ben, if you're listening, this is what you were crying about. You're paying too much in taxes, right? You have two alternatives. You can give
Stop whining, take action.
you can give me all the money, Ben, and I'll pay the taxes for you, or you can go out and do what Dave Zook did and try to shelter your income or do something like that. Dave, how did you stumble upon multifamily? So let's tell Ben and all the listeners out there, how do you get into multifamily, and what steps did you take to start sheltering some of that income?
So I stumbled at first. I teamed up with a guy that I thought was going to teach me a lot about multifamily and syndication, and I ended up being his only investor in a syndication, and gave him $750,000. He was supposed to be my mentor, guide me through this stuff, and I really wanted to do it on my own at some point. But I was a syndicatee. I was the only investor in the deal. Ended up losing about $500,000 of that $750,000 that I first invested. So that was my introduction into the multifamily space.
Wow.
So luckily, I found my now team through a series of events, and we did a deal together, structured it correctly. We did, I liked doing business with this guy. Deal went well. I actually didn't even start out in the business thinking I was ever going to be a syndicator. I really needed it. I needed the multifamily for myself as a tax protection tool.
Mm-hmm.
So I really was doing it for myself. At one point down the road, a little while later, after buying a couple hundred units on my own, I ran out of money. There were still deals in the marketplace. Best broker in the city was on my team, and I wanted to keep it that way. Mm-hmm. And I wanted to be his number one call guy when there was a hot deal that was available. So I got into it like that, and eventually ran out of money. And about that time, I was invited to sit on the founding board of a startup bank, and there was a dozen other guys there, and they were talking about investing in the bank, whether they should or they shouldn't. And I remember clearly the conversation where it was like, well, it's probably going to be 5 to 7 years till we get a return from this bank investment, but it's better than putting our money in a CD at less than 1%. And I was just like, I couldn't believe it. There are these wealthy business guys sitting around, most of them able to stroke 7-figure checks, talking about if they should, they're making their investment decisions based on a CD. So next deal that came along, we needed $850,000. Went out to see some of these business guys, and we funded the deal. And so from there, it just grew organically for a long time. Well, for a couple of years, it grew organically. Those guys told their friends. Those guys wanted to do another deal. So we started buying multifamily deals, and a couple thousand multifamily apartments later, here we are.
Wow. So Dave, let's go back to that first deal. Tell the listeners maybe 2 or 3 things that you would have done differently, or 2 or 3 big mistakes or red flags now looking back that you would have tried to avoid from that deal.
Well, yeah, there was a couple things. I got emotional. This guy was a good sales guy, and I was convinced. He convinced me that it was the best deal ever. Mm-hmm. And so I got emotional. The other thing was it was our first deal together. I had no business going all in. I should have gave him $100,000 and left him perform with $100,000 or $50,000. But no, I went all in. I brought the whole 750 myself. Just really doing research on my partner. I should have been more careful. And, you'll hear me today. You'll hear me, even at the live event, you'll hear me talking about team this, team that. That wasn't something I was born with. That was something that got pounded into me because, luckily back then it was my money and it wasn't investors' money. And, so no, it's I put heavy emphasis on the team. I'm not interested in the deal until I know who my partner is going to be, who's involved in the team.
So Dave, the average investor would go into a fetal position and in the corner and just say, I'm quitting, I'm out after losing 500 grand. I did the same thing as you. It's painful. What did you do to say, you know what, I screwed up, I'm going to go forward? Because the average person would just stop. What propelled you to keep going?
Well, it's a little bit like your buddy Ben with the tax problem. Are there people out there that are making millions of dollars a year and not paying any tax and they're doing it legally? Sure there is. Are there people that are making a lot of money in multifamily real estate? Of course. And I knew that was going on. So I recognized that it was my mistake. I owned up to it. I learned from it and, decided to keep moving forward.
So what were people telling you? Were people, the scene, were they saying, hey, multifamily is too risky? Hey, you're crazy? What were the objections you were getting from family members and friends? I got to hear some of these.
Well, I've heard all those things. I think the best thing for me was I actually went out and did it, and then I could point back and show people that, hey, this is how it's working. This isn't something that we're going to try. We're not going to take your money and go out and see if it works. I was able to show a proven model, like, look, these are deals. This is happening today. This is what we're able to do. This is what my team's doing. These are real numbers. So being able to bring that to the table certainly was helpful.
Mm-hmm. So let me ask you, what to you constitutes a good investment? To me, waiting 5 to 7 years for a return that possibly might happen does not sound like a good investment to me.
I mean, a couple things. Cash flow. Does it cash flow? Is it sustainable? What's the area like? Is it population growth? Is it job growth? And then I'm always looking at the tax incentives. I'm very interested in what this looks like from a tax perspective. So if you look back at my journey, you understand why I got chased into this space because of it. I'm very informed on the tax side and what's going on. I mean, we took a whole group of my investors and my CPA down to Belize in February, a few months back, and with the new tax law and all that, I want to stay sharp on that side because that can turn a good deal into a great deal with a little strategy on the tax side. So if you've got a tax problem and you're strategic in this business, I mean, it can be life-changing.
So when you got into multifamily, how did you get into the ATM business?
I was a passive investor, first became a passive investor in the ATM business in 2012. I got introduced to these guys through a mentor of mine. He's actually on my advisory team today, and just a really well-respected guy. He introduced me to these two local guys that were also highly respected in the business world, and said, hey, these guys are doing ATMs, check it out. And so I went to see what it was all about. I became a passive investor, turned around and invested with them multiple times. In 2016, they came to me and said, hey, you got a group of investors. We just took down a portfolio, our biggest one to date. Up until this point, they've just been going out to family and friends. They were like, do you want to get involved? Do you want to take a couple $1 million out to your investors, a couple $1 million of ATMs out to your investors and see if they want them? At the time, I was working on 2 different multifamily transactions. I turned them down twice. Eventually, then after a few months, they came back to me and said, hey, we're doing a deal right here at the end of the year. It was set up specifically for people with tax problems, the depreciation, you could take it all in 1 year. I said, you know what? I've got a little time. This works for me. I'm going to do it. It's great cash flow, well into the double digits. nice, strong tax benefits. This works great for me. There's no reason why it shouldn't work for my investors. So year and a half later, here we are. I've raised over $25 million in the ATM space, and it's like a drug. And investors, I've got quite a lot of investors who come back for the second, third, fourth, fifth, eighth, 10th unit. I mean, you're talking guys that are into the ATM business now in the seven figures. Don't know anybody that owns more than I do in my network, but no, it's just addictive. People love it. It's one of the hottest asset classes I've become involved in.
So how I mean, can you walk me through how you make money in the ATM business, how that works?
So when somebody slides their card in there to pull out $100 or $20 or whatever it is, there's a surcharge, and that surcharge is somewhere between $2 and $4. And the way we have it set up is where it's kind of a three-way split. The investor gets a portion of that surcharge, our management company gets a portion of the surcharge, and then the real estate owner gets a portion of the surcharge. So the way we have it set up with our investors, we try to take any kind of volatility out of the deal. So what an investor will do is they'll come in and buy a unit of ATMs for $104,000. That gives them either 6 or 7 ATMs, depending on the brand, the kind, the location, all that.
Mm-hmm.
So they'll come and buy the units, and that's very important because now they own the units and they can take the full depreciation on that equipment over a 5-year period. So then they'll turn around and roll those ATMs into our fund, and our management company manages them. Our management company commits to each investor, and they're saying, look, your machines are going to get you 3,373 transactions per month. Your share of the surcharge is 63 cents. And that's basically comes out to $2,125. It turns out to be an IRR of 15.5%. It's just, it's about as passive an investment as you can imagine. You just, every 25th of the month, you get $2,125 ACH'd into your account. And you get an email saying that we did it with your statement. And at the end of the year, well, in the first quarter, you get your K1. So it's pretty clean.
What are the downfalls? Do you see any downfalls or any pitfalls from investing in ATMs like that?
There could be some, if again, it has to do with the quality of the team and the strategy. I mean, if you're heavily involved in mall locations,
mm-hmm.
That's not a good thing. We've got less than 6% of our portfolio has exposure to malls. And it's the only part of our portfolio that's got a slight downtrend, mm-hmm. which is interesting. We could probably make a whole conversation out of that. Uh-huh. But no, our portfolio has been on a steady uptrend for the last 5-6 years. And you're going to see ATMs being used in a lot of different ways that they're not even being used for now. I mean, we got ATM machines in beta testing in Los Angeles right now, where you can go up and you can take your Bitcoin and turn it into cash, or vice versa. You can you can do it either way. And so there's a lot of different ways. There's marketing. There's you hear the old Western Union model of immigrant workers going up and wiring money home, and it takes 10 to 15% cut out of their check. Mm-hmm. Or you can do it for $2 to $3. So there's all kinds of different things that you're going to be seeing in ATM machines that we're not even using them for today.
I saw Jake get a little nervous when you mentioned Bitcoin back there, because Jake doesn't like talking about Bitcoin or blockchain. I feel the pain, right, Jake?
I don't know. You want to talk about Legos and GI Joes? You might as well, right?
We're not there yet. Let me ask you other assets. I know you talk about self-storage, mobile home parks. Are you heavily into mobile home parks?
I do not own any mobile home parks. I think it's a nice asset class for the. I mean, I like the asset class. Mm-hmm. Probably the main reason I haven't gotten into it is because of time constraints, and I've got a lot on my plate, as you can imagine.
Mm-hmm. So let me ask you, in the mobile home park space, is it, if you own only land, is it less? There's less tax benefits to it as opposed.
Oh yeah.
Yeah.
Oh yeah. Yeah, I mean, there's things you can do there. You can take the, infrastructure costs, and there's, plumbing and electric. I mean, but it's not as aggressive as when you say you can take a building and you can, cost segregate, and you can use bonus depreciation on most of that building. It not nearly as aggressive, and that's the other reason that I haven't explored that space more. But again, I think the times that we're in, the mobile home parks, I love it. I like servicing that group of people, and I think it's a very sustainable model. I think there's plenty of room for people in times of distress. Look, I think if you can own an asset that does well in good times, it does well now, does even better in bad times, I love it. And that's the mobile home park space.
I like that. And self-storage, how did you get into self-storage?
Very similar model as the mobile home park space. That asset class does very well in good times, does even better in bad times. And I knew that. I'd been watching the space for 20 years and just recently entered it. To me, again, it always starts with the team. So I wasn't even interested in the self-storage space until I met a world-class team. I met them through a couple investors in my network, and they were involved in 11 self-storage deals with these guys, and couldn't say enough of good things about them. They introduced me to them. I eventually brought them up to Lancaster. One of the principals flew up to Lancaster. I then took him into another good friend of mine who's heavily involved in the self-storage space. He sat there along with an advisor of mine, and they grilled him for an hour and a half, interrogated him, and it was only after that I took my team down to see their team and their outfit and looked at some of their assets. But really, I did a lot of work on the team before we even started talking about any specific asset. I want to make sure, like, if I know I've got a world-class team, you can take a mediocre asset and turn it into something. But if you have a mediocre team, you can take a really good asset and make it not so good. So my focus is on the team every time. Give me a world-class team, we'll talk about asset. I don't care if it's racing pigeons. Give me a world-class team, we'll go do something together.
How do you meet these team members, and how do you actually start building a team out?
So what I like to do is, rather than building a team out myself, I like to team up with people that already have a great infrastructure, great model, and that can be tough sometimes, because you got to ask yourself, okay, well, why, if they're so good, why do they need somebody? Why do they need me? There's always, even great teams, even world-class teams have needs. Maybe they're looking to scale. Maybe they're looking to scale higher. You and Jake could probably do just okay in the next, 10 years, just investing in multifamily on your own. Well, you think you could do better by syndicating and scaling that model, get yourself into a more scalable model? Of course. So that's the same way with a lot of these teams. They're looking for great partners as well. So you connect a great partner with a great management team, good things are going to happen.
So what was your first team building experience like? Was that in the multifamily space?
We have a great team back here in our modular building company as well. We got about 70 Amish guys, local Amish guys working for us here in our factory. So, that was my first exposure to team building. But I would have to say, beyond that, in the investing space, it's been my team in Memphis. Got a great guy, got a great team in Memphis, great partner down there, his boots on the ground. He's great at managing C-class multifamily. We have asset management systems set up at each property that we own. First thing we do is we'll go in and spend $200,000 on an asset management system. We can watch every square inch of the property, and that can make the different people behave differently when they know they're being watched.
What do you guys use?
It's called Big Brother Incorporated is the company that was up, and
you're joking, right?
No, I'm serious.
That's awesome. I never even heard of it.
Big Brother Incorporated. So we got the exclusive from a company in Canada that ships our product down here, and then we have teams on the ground that install this stuff. I mean, you're talking, you can't drive onto the property if you're not a tenant of ours. If you're somebody that's not supposed to be on our property, you drive your car in our property, our team on the ground is going to get a text saying, hey, somebody's in here that's not, that doesn't live here. And then you can watch where that person goes, and you can, if you see that pattern, at between 1 and 4 in the morning, and you got a lot of traffic coming in and out of there, there's
a little bit of a red flag, right?
Going to door 101 or something like that, something's going on. So I mean, it allows us to really keep a really good eye on the place and keep our tenants on a tight leash, the ones that don't behave. And the thing that's happened is, those type of tenants move out on their own. They hate that stuff. And good tenants love that stuff, and they feel safe. Their cars aren't being broke into. Their kids are safe out in the playgrounds. So those are the kind of tenants you want anyway.
So you market that, right? That's a great marketing piece to get good tenants in there, correct?
Oh yeah. That's part of the interview process. They're sitting right there in the room, filling out the application, and they can see cars coming in and out, and they know exactly what we have, what we're capable of. So yeah, that's kind of a screening process right there.
I like that.
It's also very helpful in rent collection. You can set a camera on a door. When that door opens, we get an alert. If you're 5 days late on your rent, we can either get on the audio and say, hey, Mrs. Smith, come to the front office, or you can send your manager out there and knock on the door. She's home. She just opened the door. We saw her go in there, so you can't hide.
Jake, Big Brother's watching, Jake.
Big Brother's looking in the house.
I love that, man. That's awesome. Before we get to the short answer questions, what are you bullish on going forward? Everyone says they're all Chicken Little running. There's no deals in multifamily. Everything's overbid up. What do you like going forward?
Well, there's still deals in multifamily. They're just not out there as plentiful as they used to be. I mean, we've done some creative stuff, like, we'll go in, close quickly with cash. Very seldom we're paying. We're usually third or fourth down on the list of bidders on a property, and we end up getting a deal because we waive contingencies, we waive financing contingencies. There's some of that stuff that you have to get creative on. We're working on a deal right now where we're assuming a HUD loan, 33 years left on a 3.25 loan. So we got a full 33-year amortization left. So creative stuff like that. I mean, if you're looking to go out and get something conventional route, something that's stabilized, not a value add property, I mean, your returns are going to be ridiculously low. So there's still opportunity there. You just got to get creative. In the self-storage space, same deal. I mean, the self-storage deal that we purchased a few months ago, 70,000 square feet. It was at 93% occupancy, which is 100% full on a property like that. I mean, you got a bunch of different sizes, but at 93% occupancy, and we're adding 50,000 square feet to it. So you got to take something, you got to add some kind of value if you want to get, a good return. Mm-hmm. So I'm bullish on self-storage. I think, like I said, I love assets that do well in good times and do really well in bad times. So you got to know who you're serving. In the ATM space, we're serving lower income folks. I mean, there's very seldom that people who invest in ATMs use ATMs, and vice versa. People that use ATMs don't invest in ATM. There's these people are the kind, that they have jobs, they get their money ACH'd into their account. Instead of taking the check to the account or to the bank like you used to, and then getting your cash to hold you over the week, their money's getting ACH right into their account. They go down to the corner deli, take out $100 cash, you get $2 or $3. So it's assets that will do well in a downturn, because I think we would all agree we've had a nice run. I'm not a real bear. I don't see doom and gloom, but I am prepared. We get a downturn, we got to slow down the economy. We'll be okay.
Mm-hmm. I've got a little teaser here. I would love Dave to jump into how he raises private money and raises money for investors. So we're going to leave that for the live event in October. So I know you're not going to want to miss it because he's raised, sounds like hundreds of millions of dollars for his deals. So, and that's an important component to it, right? I mean, getting out there, getting in front of people, and there's a lot of techniques, a lot of tips on how to raise private money. So we're going to leave that for the live event because it's going to be a really interesting topic. So.
I got another thing for you here. Dave, have you ever invested in a parking garage or parking lot?
I have not, but every time I park at an airport parking space, I'd love to own that real estate.
Dude, that is my ultimate dream. So here's the deal. I'm going to find it. I'm going to call up my boy Dave Zook and say, I got the one. And then you're going to bring in the Big Brother Incorporated and we're going to own that shit. All right.
I love it.
That is my ultimate. I got a few dreams. One of them is own a parking lot or parking garage. And then the other one's finding a big reservoir to invest in. So,
well, here's something for you to think about. What if you could wrap, a lot of these parking lots, airport parking lots, they have their own staff, they have their own vehicles taking people back and forth. What if you can wrap an Uber model around an airport parking space? Uber would have a live account. You'd wrap an Uber model around there and just automate the snot out of this parking space.
And throw an ATM machine on top for.
I love it.
And get some self-storage units in it too, right? Why not?
Well, listen, if it's at the airport, maybe they need to hold the bag and pick it up when they come back. We could start with a few little garages, right?
Yes, we could.
Little lockers. So, and the other thing I want to talk about real quick before we get some of these other questions is, how about those Amish guys? You got a lot of blue-collar work ethic there, huh? Those guys get it done, don't they?
We are blessed. We live in a community that believes in working hard and getting it done. So we've got some really good guys working for us. And, we find it, we do a lot of work in New Jersey, New York, Connecticut, Mass, and, the states around us, New England states. And our customers are amazed that our guys roll in there and they get it done.
That's awesome.
Yes, we got
love that. What is your best value add for your apartments? I know I like asking guys this because some guys are doing little fences on the garden, downstairs units and charging $75. Some guys are doing trash valet. What's your sweet spot of your bread and butter when you're going in to juice up the revenue?
We've tried and we've done heavy value add almost to the point where construction down to the walls, and we just decided that's not us. So we'll typically go in and we'll, fix the rotten face board. We'll fix, do some parking light patches. We'll paint exterior and interior paint, carpet changes. For the most part, though, we're taking a property that's, undermanaged. We're taking a property that's 80% occupied, 75 to 85% occupied, just tired. And we're rolling in there with Big Brother. We're just changing the atmosphere, and just, like I said, those bad tenants move out on their own. You don't have to kick them out. If you're not behaving, you don't want to be watched, and you eventually see those guys in the property next door, and the cool part about it is you're really creating an environment where even the properties around you, the tenants around you and other properties know that your property is under surveillance. And so that's probably our number one value add on any property. And basically what happens there is you take that property, you fill it up with good tenants. You got we got a reputation now with that system. Tenants feel safe. They're happy. You get that building filled up to 95%. Now you get to the point where not only is your rent roll up, your NOI, your property value, all that stuff. You guys understand that. So you're really taking a property that's old and tired and tenants aren't behaving. You're turning that whole thing around, a different atmosphere.
Mm-hmm.
Nice. So whether it's hiring, I want to kind of dive in because a lot of stuff came through on team building, and I think this rolls into hiring a little bit. But whether I'm hiring somebody or partnering with somebody, I'm looking for work ethic. Does it align with my work ethic? Ethics in general, right? Attitude. Could you go out and have a beer with this guy? That's the old Cameron Herold thing. When you're building your teams, what are 2 or 3 things that you're really looking for? Saying, yeah, I think I can develop a meaningful relationship with these folks, or what, they're just not passing the smell test.
There's a number of things, and number one, I mean, yeah, I like doing business with people that I like. We get together and make sure that we're a good fit. The other promise that I have with my investors, if we start doing business with somebody new, I do a deep dive background check. I don't do that with my own money. I usually joke. I usually tell people I feel a lot safer investing alongside my investors than I do when I go out and do something on my own, because I just, I treat that person differently. We're getting ready to, potentially do a deal with a mayor of a small city south of Dallas. And
be careful. Now you're getting into mafia. So you better, I don't know if you want to go
there. And the guy tells me, he said, well, I've got no dirt. I mean, they would have uncovered it by now.
Yeah. Okay, politician.
I'm like, yeah. But I'm like, hey, that's one of my rules. So we're going to have to do it anyway. Just making sure that they've got a clean background and making sure that I like hanging out with them. There's never any time when you can do 100% due diligence but there's definitely some steps there that you got to take. Background check, get around as many people as you possibly can that know this guy. Even better, have they done business with this guy? Like in the case of the self-storage, where these guys did 11 deals with these guys, with my now self-storage team. Look, I'm much more concerned about what those investors are saying about that self-storage team than what the self-storage team is saying about themselves. So if I can talk to people who've done business with and known them for a long time, that goes a long way.
No doubt. What service are you using for the background checks when you're vetting guys?
LexisNexis.
LexisNexis. What about projects? We talked a little bit before the show that you had some things going on. What are you doing right now, and what are you excited about going forward?
So we're we had a $5 million portfolio of ATM machines that opened up to us about we contracted. We got them under contract about a month ago. Right now, I've got only a few units left. We close that down on June 15th, which is about a week from now. So we'll have that.
Is that a fund model? Are you doing that as a fund? Or
yes and no, sort of. The investor will come in and buy the specific ATM machines. After they purchase them, then they'll roll them into our fund. So you're getting paid out on a blended performance of several hundred machines. So that means the cool part about that is, if let's say your 7 machines were down in Houston last year, and your 7 machines are all underwater, well, it doesn't matter, because they're in there with a fund of 500 or 1,000 other machines.
Got it.
So you're getting paid out on a blended performance of the fund. And of course, there's there's insurance and all that good stuff, so we're covered either way. But
no doubt. I think it's important to point out.
It just it reduces your exposure when you can roll into a fund.
Very cool.
That's awesome.
What about a book recommendation for the listeners?
I mean, everybody's got to read Rich Dad Poor Dad. I'm sure you guys have talked about that before, but second best, Compound Effect. Darren Hardy.
Hi, Gino. You read that one?
I read his other book. He's a great speaker. I like.
Oh yeah, stuff. I listen to him on the way to work every morning. He has this is something for you to listen to. Darren Daily. Look up Darren Daily. Darren Hardy has a 4 or 5 minute video that I listen to on the way to work every morning.
There's that little miracle morning. You want to dive into that? What else are you doing in the morning?
Hal Elrod. You like him, huh?
Yes, I do.
Well, one of the things I do probably 3 or 4 mornings a week. My wife comes out. My office is like 3.5 miles from home. So one of the things she does, she'll bring me breakfast and we'll go for a run. So I had about a 3 or 4 mile run this morning already. So I like to get out there and get some fresh air in my lungs and start my day like that. So that's one of the things. I do some reading. I do some devotions in the morning and try to get myself off to a good start like that. But we've got some good stuff going on in the morning. Get us started.
Get the head screwed on straight.
Oh yeah.
So a lot of stuff going on there. What's the best way for listeners to get a hold of you? And you got some other stuff going on, you get a book and some other stuff going out, yeah?
Yeah. So I've got a bestseller now, Amazon bestseller. It's been a bestseller for the last a couple months, but The One Thing That Changed Everything. So I co-authored it with several other authors. Got that one. I co-authored a book that's called Building Chicken Coops for Dummies.
Okay.
We were pretty much the authority since 2008 and building and shipping chicken coops all over the country. We kind of rode that whole wave 2008, 9, and 10, where everybody realized that they were way too dependent on the system. They needed to grow some of their own food and get some of their, take responsibility for themselves a little bit more. We rode that wave. That's since kind of cooled off a little bit, but we were shipping chicken coops all over the country.
Nice.
And still are. And so I really just wrote the book to kind of set myself up as the authority in the space. I don't write a lot, and I don't totally enjoy being a writer, but got some good stuff to share, so I like to share it every once in a while.
So I'm giving you a nickname. It's going to be Dave. I have my hands in everything Zook. All right. So lastly, look, tell us how can folks get a hold of you? Because I know there's going to be some people interested in the different things you have going on. Are going to want to reach out.
Our website is therealassetinvestor.com, and my email address is info@therealassetinvestor.com. And if somebody wants to send an email, I have a little article that I wrote up. It's 8 real life lessons for syndicators and their investors. If somebody sends an email to info@therealassetinvestor.com, I'd be happy to send them that little booklet.
Nice. Gino, I cut you off there. You had something to say.
Just wanted to end up by saying chicken coops, multifamily, ATMs, self-storage, what do they all have in common? They make money, right? There's always a way to make money with something, right? Even with chicken crap, my friend. You see what I'm saying?
No, chicken coops. Come on now.
Think outside the box. That's all I'm saying.
Maybe repurposing the chicken poop now. I'm going to sell it for fuel.
I love the chicken coop. I had one back in New York. I had 25 chickens running around. Putnam County, didn't have a license, had them on my property. See ya, not there anymore, but that's a fun experience. So let me pump up the chicken coop.
Dude, they're going to send you the invoice, man. You should watch yourself.
Let me tell you, that's awesome. I love that. I love that. It's great. So anything left for you, Mr. Stenziano?
No, I'm good. I just want to say, thanks for Dave coming on, and I'm excited to meet you in person and talk more about this parking garage in the future. So,
all right, see you guys in October. I'm looking forward to it.
Thanks,
Dave.
Take care.
See you guys.
We trust that you enjoy the Wheelbarrow Profits podcast. Visit jakeandgino.com, your one-stop shop for everything multifamily. See you next time when Jake and Gino share more of their investing secrets with you.